Welcome everybody to the Year in Review, Option Omega Year in Review, first annual, introduced by or sponsored by Cigars. How's everybody doing today? Put it in the chat. Yay for good or nay for bad. Yay. Yep, yay. Sweet. All the yays. Okay, we're going to do something a little bit different today for the Option Omega Year in Review to start it out. So, here we go. I'm going to see if it'll work, okay? So, I'm going to put the screen right there. I'll put that right there. I think that'll be good. Okay. Are you ready? The 2022 Option Omega Year in Review, sponsored by Cigars, with your host, Troy McNeil of Option Omega. Today's show, we'll be talking about the year in review, and we'll also be doing fireworks. Here we go. Dun, 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 dun. Dun, 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 dun. All right, here we go, everybody. Welcome. So I'm going to share my screen, and we're going to jump right in. Hope you saw that flame. That flame was crazy dangerous. Don't try that at home. Speaking of don't try that at home, I want to tell you a little something. Options involve risks. They're not suitable for all investors. Options are backward-looking and not forward-looking. Nothing I'm about to say is to be construed as financial advice. It's just for entertainment purposes only. Thus, the drum roll and the flamethrower. Never trust financial advice from a dude who intros a video with a flamethrower. A propane one, especially. So, with that being said, I'm going to share my screen. And let's see if we can do this here. So, give me 1 second. Can you see that? Can you see just the slides of that? We're going through it. We're going through it all. Can you see Option Omega Year in Review? Sweet. Here we go. Slideshow time. Now I suck at this, so one more time. Can you see it full screen when I do that? Sweet. Here we go. For real this time. The year in review. So, I'm going to back up a little bit. For those of you who traded last year, starting in October, things got a little bumpy. We had some down moves. And the year ended in a weird way. So, we had a little bump. December 1st was a big down day last year. And then from December 20th to December 31st of last year, we rallied roughly 270 points. The dragon had been slain. We began 2022 at all-time highs, 4,800, thereabouts. And again, this is not financial advice, and this is not exact. It's exact enough for our purposes today, for a year in review. But it's not to the penny by any means. So we started the year at 4,800, almost 1,000 points from where we are now. And then Chairman Powell says that transitory might not be transitory. Does anybody remember that? I'm exiting out of my screen. Anybody remember the old January transitory talk? It was cool. It was pretty cool. Last year, COVID, of course things are going to be transitory, but they're transitory. It's just transitory. It's transitory, right? Just transitory. Suddenly we get Chairman Powell saying, oh, we're going to have to actually do something about this. And what happens next? Bloodbath. January 4th to January 24th, the market drops close to 500 points. We say, what a beginning to the year. This is going to get crazy. And then, side note, there's a picture of myself on the side, because the first video we ever made for Option Omega was talking about January 24th. And part of it was why you need an intraday backtester. But there was an intraday move of over 180 points. We were 180 points on the low, and we reversed. We actually finished up 13 points. Does anybody remember that? Did anybody trade that? I have to exit out of the screen so I can see the chat, so that's why I'm doing that a bunch, but I want to see the chat. Was anybody around during January 24th? Do you remember that day? Did you trade that day? That's right. Depending on who you are, it was an all-time day. Anytime you have a 200-point reversal, some crazy things are happening. Some people are really, really happy, and some people are really, really sad. But January 24th, a reversal day. So maybe we're done with this. Got it out of the way in January. Back to all-time highs, right? And so we have the first rally. Now, if anybody remembers, this year has gone as well for Russell Wilson as it has gone for bulls in the stock market. And at the beginning of the year, the beginning of the season, Russell Wilson made a video where he came up with a saying that says, Bronco Nation, let's ride. And that's the first rally. Bull Nation, let's ride. From there, we rally. From that intraday reversal, we rally 400 points to around 4,600. And then we drop again. And the reason we drop again is this guy right here. James Bullard wants to tell us something. That is, side note, that is my graphic design. That's the extent of my graphic design skills. James Bullard on the left there, next to his father, Darth Vader. And so, Bloodbath 2, drop the Deuce. We go from 4,600 roughly down to 4,200. Now, if you remember, along that time frame, you have a bunch of stuff happening. You have CPI. CPI suddenly becomes super important. Inflation is out of control. Along with that, there's a little thing called Ukraine that is under pressure from Russia. And everything's weighing on the market during this time. It can't really catch a bounce because everything is in flux. Is Russia actually going to invade Ukraine? Who believes that? Is he just brokering for some sort of deal to where he can get stuff? Maybe. Who knows? But during this time frame, there's just another bloodbath. Another 400-point drop. So, how do you spark a rally? How you spark a rally is you bring an end to the unknowns. And this is lesson number 1 for the stock market in a year in review. It was a good lesson this year. Fear, the unknown of fear, is what drives the market lower. The known fear, quite often, is what drives the market higher. Russian forces invade Ukraine. It's February 24th. Bull Nation, let's ride. From February 24th really to the 29th. February 24th, you get kind of some lows, but they can't really go lower. But from March 15th to March 29th, you go from a low of 41.60 to a high of 46.39. I'm going to just keep saying let's ride because it's one of the funniest things to me. And CNBC is here to tell us why, because CNBC, less than full sarcasm for those who English is not your first language and sarcasm's weird. What I'm saying is full sarcasm. CNBC understands why the market's doing what it's doing. And so March 16th, they tell us that the rally is going on for a third day because investors are getting comfortable with the Fed's rate hike plan. Thank you, CNBC. Let's keep going. Oh, and that rallies. We have a rally. Let's ride. And we go to April 18th. April 18th, consumer prices go up to 8.5% for the year. So inflation is getting worse. It's not getting better. It's the lack of transitory. Bloodbath 3. So we go lower. April 21st to May 20th. Then we have this gentle reprieve. And it was so weird going through this because I remember all these time frames. Some I did, some I didn't. But this one I remember vaguely. Where we just kind of got above 4,100. And if you look at this chart, we stayed between like 4,100 and 4,160 for like 10 days. Does anybody remember that? Does anybody remember that time where like we'd go lower, we'd like sharp bounce. We could not get below 4,100, but we absolutely could not break 4,200. Does anybody remember that time? It was fun. Let's keep going. But then CPI comes out. And even the White House says, hey, the CPI report's going to be real bad this month. And the Fed the next day comes out and says, we're going to do a 100 basis rate hike. Things are getting crazy. And then you have Bloodbath 4, where you go from 4160 roughly to 3600. Very, very fast. That's a very fast drop, roughly 8 days. Then, computer's lagging up. There we go. I'm going to go back one. Yeah, June 17th to August 16th. Let's ride. Now, I'm going to go back and talk about this time period in a minute because it's interesting what it shows us in some ways. But we have this other rally, August 17th, yada, yada, yada. It's another rally. You're starting to see the picture. Big drops, can't go much lower. A big bounce, can't go much higher. A drop, can't go much lower. A bounce, much higher. Big drop. So we rally until August 16th, and then we have Bloodbath number 5, the 5th big drop. And it is from August 16th to August 13th. And that's where we make the fresh lows for the year. We go down to, I think, 34.80. Then from there, it can't go much higher. And we have a reprieve. And it bounces higher. Now, this is where we start to go and the slideshow ends. Because, partly, the same thing has happened, right? We have a rally from October, the end of October. November, I believe, the 8th or 9th, CPI comes out, CPI starts going down. So we have that 200-point day rally, right? It really doesn't go much higher from there, and we drop back down, and we end the year what is almost guaranteed to be 38.35 on the SPX. Don't quote me on that, but that's my guess for a bunch of different reasons. If you want to know why I think that, you can just Google 38.35. So, that is our year in review. Obviously, I didn't go to December with it because the yada, 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 I hope gives it away. What is happening this year? In previous years, the last 10 years, you would have drops, you would have volatility, even the COVID crash, where you go down very, very fast, very, very hard. What happens? What would happen with it? You would have perhaps an intraday low and then a rally, right? And then from there on, it's just vicious, like absolutely vicious. Like last year in October, November, we had like a 10-day period where we went up like 400 points. And that's what really the last 10 years had been. COVID crash, to the point about data being bad news is finally good news. COVID, the 30% drop, all during the unknowns of what's happening. The first unemployment number comes out. Yep, it's as bad as we thought it was going to be. Everyone's unemployed in America. The stock market says, okay, we got the data. It's go time. Bull Nation, let's ride. This year has been different. And that is the thing that I think we need to review and think about. What has been the difference this year with these rallies? Please type it in the chat so I'm just not talking about myself. What's been the difference? That's exactly right, Ian. So, in previous years, in a bull market, you have these down periods. VIX absolutely spikes. 2018, VIX is up 100% in one day. Just crazy moves. This year, we're down 1,000 points. And VIX, the standard VIX paper, is the same as it was 12 months ago. This has been the first year I've ever seen. No doubt there's probably been other years, but it's a very unique situation where the play of the year was short equity, short vol. Short equity, short vol. And that makes no sense, right? I mean, you think the crazy moves we've had down this year, new lows for the year, 3 or 4 times. Vol just could not get out of its own way. That's right. And short vol, in some ways, being short VIX. Like, there's a different. I always try to think about it in terms of like the cleanest way to think about this is outside of options, like in terms of just futures. You know, the play of the year in some ways was short vol futures, short equity, right? Particularly tech. Short NASDAQ, short vol. Like, almost as a Paris trade. That was, if you did that, you did really, really well this year, right? Now, here's the kind of takeaway from that little slideshow. If you'll remember, because it was such a great slideshow that I'm sure all of it's burned in your heart already. You remember every slide like it was yesterday. At every rally and at every low, there's a period of consolidation. Now, again, this is not financial advice, but for entertainment purposes, one of the things that I think has been really intriguing this year is that you have a rally, you have like 2 or 3 days of stagnation of it just can't get out of its own way, it can't really go higher. Not forward looking, but backward looking, that has been the time to maybe start taking the opposite position, right? The lows of the year, you have the first kind of intraday reversal. The next day, it doesn't really do much, or maybe it spikes higher. You're probably, at least backward looking, good for a couple weeks on a rally, right? And so the thing that I kind of want to take away from the year in review, at least personally, as I look back on this year, is these big moves up and these big moves down. It's very, very hard to what you call catch a falling knife, to go the opposite when it's happening, right? Like it's very difficult to do that because you could just get crushed. But if you had simply waited for a consolidation period, think back to June, that 10-day period I said where there was an 80-point range for 10 days. Well, odds are that once you break out of that range, the movement is going to be accelerated. That's actually a market profile stuff, Jim Dalton, if you've ever heard of Jim Dalton. You have this move, and it contracts and contracts and contracts, and you get these moves for like 9-10 days at a time. Well, the longer the time that happens, where the range is contracted like that, once you break out of that move, the odds are that is when you will want to take the direction of the move. So in June, couldn't get past 4,200, couldn't get below 4,100. On that Thursday, we broke below 4,100 hard. By the end of the day, we were down to 4,000. Right? Because once you break it, the odds are that the move's going to start. There's a lot of people covering. There's a lot of people trying to get out for dear life at that point because it's obviously doing something that it hasn't done in a couple sessions. Does that make sense at all? Have you guys ever looked at those consolidation periods as an options trader and thought, what in the heck am I supposed to do right now? Now, the nice thing about options is we have pun intended options with it. We don't have to necessarily wait for the big move. But how have you traded those consolidations this year? And be honest. Yes, wait for the breakout. Has anyone tried to not wait for the breakout and regretted it? I certainly have. There's definitely been times where I thought, hey, we're touching, and it's crazy, it's very nuanced. We're touching 4,200. I think tomorrow we're going to finally break out of it. But it got right to the edge of that upper range, but did not break it. I wanted to front run it. Let's put on some 4,300 calendars. Right? Well, patience, I think, has proven itself in gold this year. Just be patient. Everyone in January thought, oh gosh, we're going to 3,000. You know, they lost a lot of money this year. Everyone who thought at that first bounce to 4,600, hey, we're going to 4,900 in a week or two. They got crushed this year. This year has proven itself that this has not been a crash. This is a very orderly sell-off. And to the macro point, why is it happening? Again, not financial advice. This is just dumb old Troy. You had tech stocks for a decade operating on debt who had no profit and whose valuations were based on the future. But they were based on a future cash flow of an interest rate closer to 1% than 5%. So then you have companies who suddenly have to start thinking through their planning at a 5% debt level interest versus a 1% debt level interest. And the market, I think, in some ways wisely said, no thank you. Because the valuation metrics have now shifted. This paradigm has shifted. That's right. Free cash flow is suddenly a thing again. You know, and what's interesting about this is not necessarily options related, but Warren Buffett for years has just been like, it's crazy. And people are like, but you're missing out on a generational opportunity. And maybe he did. But he just sat there and he'd be like, well, this is, it's crazy. I think he said about Tesla, like, Tesla's awesome. I love it. Like, there's no way I'm buying Tesla. Who knows? Here's the crazy thing about Warren Buffett, and this is the thing about him. I wouldn't be surprised if, like, he buys Tesla at these levels eventually. Now, it's very expensive, but let's say it gets down to like where it was 3 or 4 years ago from a valuation standpoint. I could see him buying Tesla at that point. I don't know. I don't know Warren Buffett personally. That's right. He bought Kraft. He loves Kraft, and he loves Coca-Cola, and he loves trains and things like that. But anyway, so the big the big macro takeaway is CPI has come back with a vengeance. Investing matters now, right? Things are not the same way that they were 10 years ago where you just buy the dip, right? Now you have a little bit of buy the dip or maybe sell the rip. Or sell the rip, buy the dip. I don't know. Now, let's talk options for a second from the market, because that's what we do here at Option Omega. How do we play this? How have you played this year? And how do you play going into next year, assuming that there's probably going to be more of the same? It's not like necessarily inflation is going to get back to 2% in 3 months. It's going to take a while. And the Fed has, a large part of these dips and rips and things like that have shown themselves to be Jay Powell just being like, I'm serious, right? Now, whether he should be serious or not, I don't have a say in that. But his premise has been, I'm serious. So how do we as option traders play that moving forward? If I was running an advisory service, I would say, we wait for opportunities, and then I'd put my little trade alerts out, and it would be cool. Maybe I'm really good, and you guys make money and things like that. But we don't run an advisory service. What we have is a back tester that looks at data through time and figures out what good trades are and bad trades are, or allows you to. So what has been a good trade this year? Double calendars, right? Why has it been a good trade this year? Because vol is in a state of flux where it's both always descending, but never descending that much, right? So you have this situation where the short contract is always decaying, and the long contract doesn't really decay as much, and because vol's elevated all year long. People are pissed off because VIX is at 20. VIX is 20 is a very high VIX. We're in a very elevated vol environment. Selling spreads. You might feel to yourself, I haven't got as much premium as I deserve. I should be getting more premium for the moves. What Option Omega has shown is maybe add some Vega to that. Maybe add some Vega to that trade. Maybe don't trade certain days. We don't have that much data because Thursdays, Thursdays just launched in April and May. But maybe you look at it and you say, hey, from what the data we have so far, there's certain days of the week to certain trades work better. And so my encouragement to you is you don't I sat there and said, if you wait for a breakout, going with the breakout has worked this year. But you don't even necessarily have to do that in the options market. What this year has shown is that even very mechanical trades with a good amount of discipline and perhaps a little bit of creativity has worked really, really well in most all market environments. In rising market and falling market. And 35 VIX and 20 VIX. Has it worked as well as other times? No. But it's worked. That's right. So people who... what this year has taught me is if you manage your risks and you have confidence in your trading ability, then whether it's an up market or a down market, you probably can be a Russell Wilson and just let's ride. Like every direction, let's ride. Because there's trades for up markets and down markets and things like that. That's the beauty of options. That's why we're option traders. Some of us trade futures too, but we're not futures people. We're options people. And the nice thing about options is it gives you the ability to trade any type of market. There are people, it's a little bit more dangerous, but I know people who, those 10-day periods where it was consolidation, the consolidation periods were actually their best time of the year. Yeah, I was thinking Russell Wilson Seahawks. Let's Ride. It's as if Let's Ride was for the Seahawks when their defense was really good. So that's a lot. But anyway, the main thesis of this is the market's been crazy this year. The Federal Reserve matters. Whether you believe the Federal Reserve or not, that is going to be the question in 2023. Are they lying? Do they not know? Are they sitting here saying, like, we're going to keep rates elevated for a long time? And the market's sitting here saying, okay, sure. Like, the first sign of a recession, you're going to drop them. Who knows what's going to happen? But the nice thing is we now have a couple months of data of 5-day-a-week expirations in SPX that allow us to look back through time to see a falling VIX environment, a rising VIX environment, and what works through that. So, with that being said, I'm going to give you a little Christmas gift, a New Year's gift. This will be the last Cigar Lounge for the year. Happy New Year to all of you. And give me 1 second, I'm going to get this ready for you. In the chat box, I give you what on paper looks like the worst portfolio ever because the way we had to set this up, but it was a nice clean way to send you all the tests. So don't look at the portfolio, just look at the tests. And what these tests are is the date ranges of every up move and big down move this year based on the idea of just buying a 50 delta put or a 50 delta call. Now, caveats to this. A, Merry Christmas. Why did I do this? This is the dumbest thing ever. It's purely for entertainment advice. No one knows what the future is, right? There's only one Lord of the Rings, as Gandalf says, and that's the name of the portfolio that I just posted, because no one knows. But I thought it would be fun to look back and say, what would happen if we knew the dates where the market's going to drop or market's going to go up? And so all I did was buy 50 delta put or a 50 delta call. Here's the caveat. You now have the dates in these tests. You have these individual tests with these individual dates. You can know whether it's a bullish or bearish trade date, whether I sold or I bought the put or bought the call. So now I think it would be very, very fun if you guys took that and figured out, okay, if I knew the market was going to drop 500 points in 15 days, what would I do? And this is just for this actually could be educational, because here's the premise of options. Like you're a futures trader, you say, well, I think it's gonna drop 500 points in 15 days. What do? You put everything. You just sell all the future. I mean, that's what you do. With options, what's crazy is you could actually pinpoint it, right? You could pinpoint it exactly where it's going to be if you knew. It's like the Biff, Back to the Future 2 with the comic book, right? I just gave you the comic book, but I don't have the futures. They're past dates. It's a stupid comic book. But anyway, I thought that'd be fun. I thought that'd be a little thing that'd be cool to look at. I give you the bullish and bearish dates. Have fun with that. So, did everybody get that? Can you see it? Put it in the chat if you can see it, please. Oh, I see a thumbs up. Sweet. Cool. Okay. Guys and ladies, Merry Christmas to you. Happy New Year. We are so thankful you are here with us and trading together. I've learned so much from you all this year. You are a very, very smart crew. We did not build Option Omega with the idea of a Discord community. We were building a tool because we're all nerds. But one of the cool things about this that Rusty and Matt and I all talk about is how cool our Discord community is. And I'm in a lot of Discords through what I do. And I just shout out to you guys because very smart traders in here who are thinking through trades in a very esoteric way, in a very practical way. And you don't get both of those in the same Discord usually. You might get esoteric people, you might get very, very practical people, but you all are thinking through things together, and I love it. So, Happy New Year to you. Merry Christmas to you. We have a lot of really, really, I think, pretty big stuff happening next year that we're excited about, and we can't wait to share it with you when it happens. But I'm not going to say I love you, and I'm not going to say you're my family, because that always pissed me off at work when they're like, we're a family. You guys are really, really great Discord peers with me, and I'm thankful for all of you. So, Merry Christmas, Happy New Year. Let me know if you have any questions. Reach out to Matt, Rusty, and I, and we will see you next year trading together. Talk to you soon, guys.